So Module 2, let's begin with finance and governance as it relates to investment readiness. So the first thing we want to zoom in on is the investor opportunity worksheet. This is something that you will work with your mentors on to articulate the amount of capital that you need, where you're operating, how much investment is important to you, some of the impact measures that you already have handy, and of course, some of your financials. The objective of the opportunity worksheet is to have you be able to introduce yourself. It's not to win the investment itself, but at least introduce your value proposition and the kind of capital and amount of capital that you need. This is important, I think, in establishing or beginning the dialogue with investors in a way that establishes confidence. So, what is a justifiable ask? It's obviously an outgrowth of some of the work that you're doing. You've probably already raised some capital and had to go in and ask for certain capital support from benefactors or grant support or perhaps even investors already. But is it justified? And it depends on whom you ask. This next diagram is graphically one that I like because it shows the entrepreneur's ask. Of course, on the left-hand side of this very messy sort of thought chart are all of the things that have gone on before, and any entrepreneur will walk into investors and say, but things will become better. We've learned so much, we have some new ideas, and we're propelling towards the future. Now, from the investor's perspective, it might be a little different. Of course, they've heard entrepreneurs come through their door and given them this kind of pitch in the past. So the question for them is, how are you different? If I were to look at the investor view, it is best depicted in this puzzle chart, which has 4 quadrants or boundary conditions by which money might go in and then come back out of an investment in a social or environmental enterprise. The first quadrant is the capital source. Sometimes the investors that you're speaking to have their own capital, for example, a foundation that might give you grants, or a high net worth individual who might make an investment. But many times they are funds who have received money from other people they would call limited partners or other sources of capital, and they need to be reflective of the agreement as an investor that they've made with their sources of capital. Then there is the direction of the capital. The direction of the capital often will be bounded by geography or sector focus or size of capital or even the type of capital that would be placed in an investment. The third quadrant is who is the target? That's you. So looking at what the target opportunities are as a priority for that investor is very important to know going in to a meeting with that investor. And finally, you need to be quite clear to the investor how they are going to get the outcomes that they're after. In this case, an investment outcome has to do not only with a financial return, which may be required, but also on a social or environmental impact return. Being clear on both is very important to a successful meeting. So what is impact investing anyway? We should step back a little bit. If you look at most of the descriptions by large organizations active in the impact investing space, they would say impact investing is the intentionality not only of the investor to place capital in organizations that by their very fiber and activity can create beneficial outcomes, but also the intentionality of those investees to create those kinds of outcomes. People often worry about mission drift if their money goes in or if certain types of capital support comes in, and so syndicating amongst impact investors is quite important. I won't go through all of the variations of impact capital or how investors might be deploying their capital, but I do think it's important to understand the expectations of anyone who you propose to speak with. This next chart actually graphically depicts the puzzle chart that I showed you earlier. Here you see that there are 2 sort of minimum thresholds. The minimum threshold on the horizontal line would be what is the minimum financial threshold, and the minimum threshold on the vertical line moving out to the right would be what is the minimum threshold an investor might want to achieve on an impact measure standpoint. Of course, you want to see where your company might be on this chart. But if you're achieving a less than market rate return but a high impact, then you're probably appropriate for an impact investor who would be seen as looking for the impact first before they're looking for a financial return. If you have a high financial return and then afterwards you are also able to claim and show measurable impact, you might be more appropriate for someone who has a much higher financial standard but would be making money available to you because of that impact as well. This next slide is another graphic depiction. It's important to look at where you might sit from a operating standpoint. I would imagine most of you in this cohort are in that third box over from the left, and that means that you're close to cash flow break even, but you need a little bit more capital support in order to get to cash flow break even. Below those blocks that I pointed you to are certain lines that tell you which kind of investor. Over on the far left are the philanthropic sources of capital, and on the far right are the traditional sources of investment capital. In between are where those impact investors lie. So the opportunity worksheet has you think about and work with your mentor team to articulate the boundary conditions that are specific to your organization. Those boundary conditions, if you will remember the puzzle slide, are now captured on this form. The outcome of this particular section of Module 2, Section 2.1, is to fill this sheet out and post it up on the website. Let me be also quite clear. You don't have to be perfect right now with the schedules that you post up in Module 2. We hope that Module 2 is only the beginning, and your schedules will be informed by the work that you do in Module 3, which you'll look at impacts and impact measurement, Module 4, where you'll look at sales and marketing, Module 5, where you delve into your business model, Module 6, where you understand operational flows, and finally we loop back in Module 7 to return to these financials and to your diligence folder and building that out in a way that you've now worked through, perhaps changed many of the schedules you might post up today. But please get started today, and you can refine it as you go along.